Buying your first home, refinancing, improving your credit score, buying an investment property, or even home design tips. We got you covered.
Hello and welcome to Mortgage Matters, a show where we talk about home buying, refinancing, and mortgage tips with Shashank, Shekhar, the CEO of Arcus Lending. In our today's show, we not only have one expert, but three. We have with us a CPA, a real estate agent, and of course, our very own Shashank, Shekhar. Shashank, welcome.
Thank you.
So Shashank, starting the show, what's the first step when someone is considering to buy a house?
So when you're thinking of buying a home, there are two important things that you need to do. First, you need to figure out if you're actually ready to buy a home. And there, the things like budgeting comes from. There are the things like how much are you saving after you have paid all the debts or all the obligations that you have. Once you have done that for a few months and you're kind of in that comfortable position where you think that this is something that I should be able to manage if I get into a mortgage when buying a house, then the second step is finding a loan officer, a loan consultant, mortgage lender, whatever you call it, and get yourself pre-approved. Now, pre-approval is a process where they help you figure out how much loan you will qualify for, and even more importantly, what kind of payment you will be getting into. So you look at your budgeting, which you did before, and now you look at what kind of payment you'll be paying, because a lot of people have this misconception that when they buy the house, mortgage is what they have to pay. And that's not true. They also have to pay property taxes. They also have to pay home insurance. In some cases, they might have to pay HOA dues because they live in a community, like a condo or a townhome. And of course, there are maintenance costs on top of that, which you may not have when you're in an apartment because you just call the apartment office, they come and fix your stuff. So you need to think of all those expenses that you will incur when you are buying a home and see that when you get pre-approved, the kind of payment that the loan officer is offering, is that in line with what you think you'll be able to make those kind of payments based on the budgeting that you did before? And those two are absolutely the two first things that anyone should do, because I see that the common mistake which everybody does is that the moment they think about buying a home, they hop onto Zillow or Trulia or Redfin, because they just start looking at homes, all these nice, beautiful, blingy, shiny homes, because it's a nice thing to do. It just makes them feel good. But they should do the dirty work first, figure out their budget, get themselves pre-approved, and they think if they can buy those blingy, shiny homes that they were looking at, as in be my guest, go ahead and look at those homes.
And what are the little-known sources of down payment?
So down payment has been one issue that we have been talking about a lot in this show. The reason we talk about that a lot is because it is the biggest challenge for anyone who is thinking of buying a home. There are some sources which people don't automatically think of when they think of down payment. The things that they come to their mind is, of course, just the savings in the checking account where they have saved the money. Maybe they have bought certain stocks or the company has given them the stocks and they think they can sell those stocks and get part of the down payment. Some of the other lesser known or things that they don't usually think of are things like 401k loan. And 401k loan is where they can get a loan from their 401k. A lot of people who have worked for a certain number of years, whether with the same employer or an employer before, may be able to borrow that from their 401k. That's one of the things that they can consider. One of the other things that they don't consider is getting gifts. In pretty much all loan programs that we work with, or any lender will work with, gifts are allowed from your close family members, people who are related to you by blood or marriage, meaning on your side of the family and your in-law side of the family. And it's not uncommon, especially in our community, where parents or parents-in-law will be willing to give you a small amount of gift, which can go towards down payment of your home. And those things people usually don't think of because they're not thinking, because that's something which is not right in front of their eyes, because they see their savings and checking account and brokerage account on a daily basis, but they don't think of 401k and gifts. In fact, later in the show, we'll have CP, as you mentioned, and he'll be talking about what are the tax implications of getting a loan from 401k or getting a gift from someone.
So what are some of the loan options or loan programs that the first-time home buyers have?
So if you have done the first step, which is what we talked about, is that you have figured out your budgeting, you've got yourself pre-approved, you think that the payment that you're going to get into is something which is affordable for you. The second step we talked about is to figure out the down payment. Don't just look at your checking savings account. Don't just look at where the money is in the brokerage account. Look out at other sources. Look out at things like 401k or IRA or getting gifts from, say, your family members. If you've done those two things, then you're looking at the loan options that I can have as a first-time home buyer. And there are loan options which are, of course, if you have been able to save a large down payment, you can, of course, pay a 20% down payment. And then there are several loan options that you have. But even with people who do not have 20% down payment, who have 3% or 5% or 10% down payment options, there are several loan programs. As there are conforming loans, there are FHA loans, there are USDA loans, even VA loans. If someone is a veteran who has served in the military in the past, they qualify for a VA loan with 0% down payment options. And all these loan options are available, and most of them come with no mortgage insurance, because I know a lot of people don't like mortgage insurance because of the fact that it's expensive and it may not be tax deductible in some cases. So, and again, loan consultant will probably be the best person to advise them, because it's not just the loan options in terms of loan programs, but in one of the earlier shows, we talked about ARM versus fixed. Like, do you take an adjustable rate mortgage or do you take a fixed rate mortgage? We also talked about different tenors of the loan. We talked about the fact that there is a 10-year loan of 15, 20, 25, 30. Which of that loan option do you pick? And that's where I think the role of an expert loan officer comes in. Because if you get that wrong, especially when you're buying your first home, that can literally cost you hundreds and thousands of dollars down the road. And not just that, and people have lost their homes in the past because they did not pick the loan program which suited most with their financial goals and whatever their future was. As a lot of people took adjustable rate mortgage and negative amortization loan back in 2005 and 6, and that's what caused the biggest real estate crisis we have ever seen.
So viewers, like I had mentioned before in my introduction, that today we not only have one expert but three. So after this break, we'll be talking with the CPA and real estate agent. So keep watching Mortgage Matters.
Welcome back to Mortgage Matters on ZEE. I know some of you are going like, where is Kritika? Don't worry, she'll be back. I have a special guest in the meanwhile for you. I have Chetan Dogra, who is partner and CPA at Dogra Sehgal LLP. Welcome to the show, Chetan.
Thank you so much, Shashank. Thanks for inviting me on the show. It's a pleasure to be here.
Of course. And as we said before we went on the break, that we will have a CPA answering your tax-related questions. So let's start with something very basic, Chetan. Like, we talk about the fact all the time is that home buying is a great investment because it offers tax benefits. What specifically are those tax benefits?
Let's say you're a rentor and all you're getting is rental receipts.
Sure.
You know, to add insult to the injury, people who are renting, they are paying rent and they're not getting any deductions. They're paying for somebody else.
Yes.
Somebody else is getting mortgage interest deductions. They're getting real estate deductions. So, having said that, let's come to, what are the tax benefits of having a home? Having a home ownership. So, the biggest is, you get home mortgage interest deduction.
Of course.
Up to an home ownership acquisition. Up to $1.1 million. In addition, you get your deduction for your real estate taxes. So let's talk about what tax deductions we get once we have a home ownership. Mm-hmm. So home ownership provide you tax deductions with your home mortgage interest deductions. You get deductions for your real estate taxes you pay. Mm-hmm. You can take deductions for home office expenses.
Nice.
You can get deductions for your rentor expenses, if you're renting the property. In addition, if you want to convert everyone has like a credit card debts. They have consumer debts, they have cars and other stuffs. So they can convert those loans they can consolidate all those loans into home equity loan, up to $100,000. They can consolidate all these loans, and not only they are reducing their interest, they're getting now tax deductions for those, because those were all personal expenses. All your consumer loans, you don't get any deductions for those in income tax returns. And then there are a lot of other tax benefits. You can take casualty losses. Some issue happen, you have a disaster come to the house, you have a flooding, you can take those deductions. You have moving expense deduction. If you are employed and because of your employment you have to move your house 50 miles from your previous employment, you can take those moving expense deductions. You can take deductions for medical reasons where you have to do home improvements because of the medical issues you have. So, and the list is very big, but this is the foundation,
Nice.
if you have a home.
So let's go back to something you said. You said that the mortgage interest is tax deductible when it comes to the IRS codes that you have. Is there a certain price limit or is there a certain loan limit that you have to get that kind of a deduction?
Yes, so there is a loan limit up to 1.1 million.
Okay.
There, if you're taking up to that much loan, it's called acquisition indebtedness.
Okay.
So up to that limit,
you
can get all the mortgage interest deductions. Now, if you get over that amount, then you can still amortize those interest payments during the lifetime of the loan.
So before we went on the break, I was talking about 401k loan. We were talking about what are the other ways that, say, a home buyer can get down payment from. And we talked about two things. We talked about a 401k loan and we talked about gifts. Can you first address 401k loan, Chetan, and talk to our viewers about what kind of tax deductions or tax implications that a 401k loan may have if you're trying to buy your home?
I would first start with IRAs. The contribution people do to the IRA, you can take up to $10,000 if you're a first-time home buyer without any tax penalty. So there is no tax penalty for withdrawing those contributions.
Okay.
Regarding 401k plan, you can take a loan against those 401k plan, and you can use that money to make your down payments.
How much of loan can they take against 401k?
Well, there is no limit to that.
Okay.
It all depends how much contribution you have there.
Okay.
What other you can do is that if you have a 401k plan from previous employer, you can roll it over to an IRA, and now when you're taking withdrawal, there's no penalty. But you cannot roll over from the current employer to an IRA. So what you can do is you can take the loan.
Okay.
Now, the benefit is you're taking that loan and you're paying your closing cost fees or your down payments. And also now you're paying interest on that loan, which is going to your tax-free pension plan.
Okay.
And it's increasing your contribution there.
So Chetan, let's get to the gifts. As I said before, gifts is one of the things that home buyers look for all the time to see if they can use that towards down payment. As a mortgage lender, of course, that's what we recommend them if they are falling short. But the one question that always comes back to us is that what are the tax implications for something like this? Will the parents who are giving the gift, do they have to pay the taxes? Or say the kids who are receiving the gift, will they be liable for any taxes per the IRS code? So what's the answer for something like that?
It all depends who's the recipient of the gifts. Any US citizen who's getting the gifts from their parents doesn't have to pay any tax. The parents can give up to $14,000, each person. So if there's a husband and wife, they can give $28,000 gift to the person who's buying a home, to their child. And there is no tax requirement to report anything.
Okay.
If they are giving more than that, the parents can use their exclusion is their income tax exclusion, which goes up to $5 million for each person. So, each person in the family can give a gift up to a $5 million in their lifetime. So that's now if the person who's receiving a gift is not a U.S. citizen, then there's a challenge. Then there's a limitation. He can only receive a gift without paying any tax up to $148,000.
Okay.
If the gifts are coming from overseas, and the gifts are coming from either an individual or an estate, then there's no need to file any income tax returns or report anything up to 100,000. But the moment they are more than 100,000, then you have to file information tax returns. If the gifts are coming from corporation or a partnership, then the threshold is low. You know, any gift coming more than $15,647, you have to file information tax returns.
Okay, so the good news is that, of course, in most cases, it's not coming from partnership or S corporation because it's usually the parents who are gifting to their kids. So from what you're telling me, it seems as if the tax implications of these are very minimal. Even the documentation requirement seems to be very minimal. And this is one of the sources that the home buyers can potentially dig into if they are thinking of buying their first home or their second home.
Definitely.
So thank you so much for answering all those questions. I'm sure that would have clarified a lot of things to our viewers. Even I wasn't sure about some of those IRS tax codes and wish we had time to talk to you a little bit more, Chetan, here. But that's all the time we have in this segment. Thank you for being on the show, Chetan.
Thanks for inviting me. It was a pleasure with talking to you.
Sure.
Thanks.
Ladies and gentlemen, Chetan Dogra, we will be right back after this, and then we'll be talking to a real estate agent on Mortgage Matters. Welcome back to Mortgage Matters on ZEE. Before we went on the break, we were talking to Chetan Dogra, a CPA, about tax implications on when it comes to home buying. I have another special guest for you, Preiyaa Anand. She has been a realtor with Keller Williams for over 10 years now, and she has been advising hundreds of home buyers on how to buy their first home. Welcome to the show, Preiyaa.
Thank you. Thank you, Shashank.
So let me start by asking you something very, very basic, which is, how does someone find a good real estate agent?
It's best for them to talk to their friends, family, business associates, or even neighbors and see if they have any good recommendations. They can also check online reviews and interview agents.
So when they're interviewing agents, what are they trying to find out?
Yes, they're trying to see if that agent is going to be a good fit for them. The agent needs to be very patient with the process, be able to explain the process, also be a good listener to be able to understand what the buyer wants.
And that's so right, because what I've seen in my experience is that it's not always, say, how high producing an agent is.
Right.
Sometimes it's just a question of chemistry,
Yes.
because you're going to work with that real estate agent for several months in some cases.
Right.
And you need to make sure that there is a fit between you and your family and the real estate agent that you'll be working with. So great point on that. So let's say that they have talked to their friends or done online reviews, checked online reviews. They interviewed few agents, and then they have now finally finalized which agent they want to work with. When something like that happens to you, I understand that agents typically do what they call initial consultation with the buyers. What do you do in that initial consultation when you meet with, say, one of your buyers?
Right. We are trying to find the goals and expectations. What that buyer really wants to establish during the home search, the right neighborhood, the right location. Location is key for many home buyers. Also, what price range they are targeting.
And so how do you address it differently? So say if someone is looking at a $200,000 price range versus, say, $600,000 price range, how do you consult those buyers differently? What is it that you're advising them?
So if it's going to be a starter home for them, then again, a good location, because down the line, if they do want to sell, they do need to have that correct resale potential. Or even if they choose to rent down the line, they do want to be in a good school district.
So it seems as if when you're doing consultation, you talk about what their goals and needs are. You're trying to figure out. How about the fact that how long do they plan to stay in a home?
Yes.
Will that change anything about their home buying process?
That definitely changes things about the home buying process. If they're looking for a long-term plan, they want to be in a good school district so that they can then have the children educate out of those schools.
So do you typically see, in your experience, because you've worked with literally hundreds of first-time home buyers, and people who are probably recently married or are single, do you see that their needs are different than people who have kids, small kids or whatever, who are going to schools. What is the main difference that you see between these two different kinds of buyers?
Young families who have just recently been married typically look for easy maintenance homes. Condominiums would be their choice. Low maintenance, only the interior maintenance is their responsibility.
Sure.
And then also a location which has a good walk score.
So what is a walk score?
Being able to reach all their destinations.
So
by
they can
walk.
go to groceries.
Grocery
and they can
stores,
maybe-
parks, nearby library.
Nice. How about commute, like train station, bus station,
Yes,
those kind of things?
walk to the BART.
That's perfect. So you briefly talked about location when we were talking about initial consultation. And I know that in real estate, we, within the industry at least, always talk about the fact that when you're buying real estate, it's all about locations, locations, locations.
Yes.
What does that really mean when we say locations, locations, locations?
Location is very important when it comes to real estate because that is one element that you cannot change.
Okay.
That does impact the value of the home. It
So
does help.
so what are some of the things that you cannot change? Specify. Give me some examples.
Location is one thing you cannot change. Price and condition are the other factors which can be changed.
So talk to me about location itself. When we say location, we say that as in, can we not change the school district we are in? What are the things that a buyer, when they buy in a certain location, will not be able to change?
Commute to workplace, major
that makes sense.
employers where they are employing. For example, the Silicon Valley, you want to be within that area where you can commute easily to work, have easy access to all your freeways, but not be too close to the freeway. That would be a bad location.
Sure.
Not back up to a railroad. That would be a poor location.
So let's go back in the process, okay? They first found out how to find a real estate agent. Then you did the initial consultation with them, figured out what their goals were. Now you advise them what location to buy in, which is very important. Let's talk about the next step, the final process when it comes to especially where you are involved as a real estate agent. How does the offer process looks like? So if they have found a home that they want to make an offer on, how does this entire process work?
So we find out mainly what the seller's motivation is because we want to submit the correct offer that would be accepted in today's market rather than invite a counter. So those seller's expectations and seller's motivation is key.
Those were all wonderful answers, Preiyaa. I'm sure our viewers would have hugely benefited from your expertise in that case. I wish we had more time to just keep talking about some of the real estate needs of our viewers here. But that's all the time we had. So thank you so much for coming on the show. Ladies and gentlemen, Preiyaa Anand, you can find more about her on her website, that is preiyaa.com. On that note, we have come to the end of another edition of Mortgage Matters. We learned a lot from our special guest, CPA, and the real estate agent. I'll be back next week on another show of Mortgage Matters, and I'll be joined with my co-host and partner in crime, Kritika Aswani. Till then, be good.